Good morning, everyone. Today we give our presentations, and me and my colleague Rahul, Manpreet, and Dimple we gonna give our presentations on the Australian financial market. So first of all, I wanna do the intro. We do the financial research and analysis in the Australian markets, how it's gonna work, and which sectors they divided in. So the four institute range from the financial and non-financial deposit taking institute, including commercial bank, investments bank, insurance, and the investment funds as well. And the next I wanna do talk about a bit on a commercial bank as well. The commercial bank I took, like in our assignment, the Aswide Bank, which is the 10th commercial listed bank in the Australian stock exchange. The next one is the difference between the how they make their income. The mainly income in these banks are like mainly on the deposit and the lending the money to the bank. Further in the I'm gonna talk about the insurance companies. Insurance companies we took in our assignment is AUB Group Limited, which is the top insurance company in Australia, and that company mainly do their business from the individuals, and the business from the premium less any subsequent number of the claims, whichever they're making the monies kind of. And the next one is investment bank, National Australian Bank, National Australian Limited Bank, which one we choose. And it's do the same kind of things, like a bit higher in commercial banks. So in my last slides I bit further study about the investment funds as well. Like we choose the Akron Capital Fund Limited, and it's not included in ADI Financial Institute in Australian, which is not recorded primary investment in emerging company of Australia. That's all for my presentations because of the last time. So Dimple is gonna be carry on our presentations.
Hello everyone, myself Dimple. Moving on from the part explained by Sandeep, my next part is analysis of three financial questions. First is Oswald Bank Limited partnership, in which they has recently partnered with FinTech and Queensland Rugby League to drive its brand awareness, and it seek exposure to several loyal clients and resolve complex regulatory settings. As the claim, next is Orb Group Limited COVID-19 implication. As we all know that we all are suffering from COVID-19 from in all over the world, as the claims for health insurance are going up while the sale of travel insurance policies is affected due to insurance policies and travel restrictions all over the world. It will increase the business expenditure while revenues will take a serious hit at this end of this year 2020. And the effect of working capital management of the insurance company will be likely affect in this end of year. And the next is National Australia Bank Limited insider buying. On this May 16, 2020, the CEO of ASX, NAB Rose McEwen, bought back the bank's stock worth of 737k for Australian 15.51 per share. The bank significantly increased its own shareholding by all over 951%. This is a clear example of capital structuring event, since the company is engaging heavily to maintain treasury stock. And the last one is Akon Capital Investment Fund Limited. This is for all over the capital budgeting. As we all know that capital budgeting is the utmost going up important to the asset management company, and it provides consultancy services to each client and then performance report for assets, and it also provides the all poorly performing assets and the option to assess and explore different available options. Thank you, and the next part will continue by my friend Rahul.
Hello everyone, my name is Rahul Adan. Today I am here to speak on the topic fact finding of Australian market regulations, and the first part is advantages of going public. Stock exchanges around the globe help businesses to meet capital requirements. Another part is disadvantages of going public. It is a quite expensive and time consuming process. After the third part is requirement for listing an ASX. Company needs to have a minimum of 300 non-affiliated shareholders with a minimum holding of $2,000 each. After that, there is a listing on ASX. Steps involved in the listing of ASX is appointment of advisor, preparatory work, institutional marketing program commences, lodge prospectus with ASIC, marketing and offer period. I will also like to share my views on the topic fact finding of requirements on financial advisory service registration in Australia. That is Financial Advisory Register. First part is Australian Securities and Investment Commission Register comprises the information, and another is register or update registrar. Any individual who possesses authorized financial services license is approved to provide financial advice. And the third part is applicable professional standard. They require to have an official qualification followed by a FASEA exam. Thank you very much. Now my friend will continue further.
Hello everyone, my name is Manpreet Kaur. Today I'm going to explain some slides, that is of risk analysis and project evaluation. So today I'll describe you about that risk analysis and project evaluation. So I have taken this slide. This is NPV based, means like net present value. So here I have taken the revenue of these 4 years in these ones, and like from these one I'm decreasing the variable cost. So after decreasing the variable cost, and after that I need to decrease the value of the depreciation expense. If you can see here, it's 450, and after that I need to less the fixed cost as well. So I'm getting the operating profit from these ones, like from the revenue I'm decreasing 3 values. From there we can get the operating profit. After that, if we are decreasing the tax, then we can get net operating profit, right? And after this, if we talk about, we are adding the depreciation expense, that is 450. We reduce here, but we are increasing here, like we are adding up. And then after that, less the increasing CAPEX. So the if we are decreasing the working capital as well, and after that we can reduce this. Adding this value of this one, and we can get the NPV. As you can see here, the values are here. In the next slide, I will show the case 1. Like in the case 1 here, the case is same. Like you can see it's looking like same, but it's the difference is like we have decreased the sales by 10%. You can see here, like it's 350,000 to 315,100 units. 15,000. So it means that it is decreased by 10%. The amount is this one, like the units. So here the variable from the revenue is saying like in the 4 year 1, 2, 3, 4, and we are decreasing the depreciation, fixed cost and variable cost, all these 3 things. We are getting operating profit and reducing the tax. Like if after that we are getting the net profit, operating profit, and after that, if we are adding the depreciation expense, we can get the NPV. The value is 5,286, and these all are the values that I got from this one. I also have the second case. I'll describe you in the second case. That is here in this one, I have decreased the price. Like price that was $22. I'm decreasing 10% from that one. You can get 19.8. With that one, you can see this case. This is also concerned the same, like the revenue is like the same in 4 years, and I'm decreasing the variable depreciation and fixed from this one. So I'm getting the operating profit, right? And after that, decreasing the tax same in this as we did like in the previous one. So we are adding the depreciation expense, and in the last we are getting the NPV, that is 4,432. I have the third case as well. It's different from that one is that like it's in this variable cost per unit is increased by 10%, like that was 11, it increased by 10%. 10% of 11 is like it increased by 12.1. So here like you can see the variable cost like as here its variable cost is 42.35, right? Then we are getting the net profit again, net operating profit, and in the last we are getting the NPV. So this is my third case. If I'll describe you another case, we are getting like another one that is a fixed cost. In the previous one it was variable, now it's fixed cost. It's increased like 10%. We have increased this one, that is from 3,50,000. Then after increasing 10%, it becomes like 3,85,000, right? And we are getting the same NPV here. The method is same, but difference is here, if you can see. Okay, and another one, if I'll describe another case, that is like the last one. Sorry, that was the last one. So the another is my conclusion. If I make conclusion, I'll tell you that it is observed that NPV is highly, as you see, NPV is highly sensitive if we make some changes in the cash flow assumptions, right? If we describe in the changes scenario with some changing assumptions, you can easily see that the it's like normal scenario and some changes, right? Thank you so much.